Because we've been managing money since 1986, we've been through a lot of market ups and downs. The 87 stock market crash, we were there. The 98 Asian crisis, we were there. The 2000, 2002 bear market, we were there. And then the 2008 bear market, we were there. And we actually fared really well in most of those markets. The first three, we did exceptionally well. The most recent one in 2008, we got knocked around some, just like a lot of people did. A lot of people ask why the 2008 bear market was so severe and why it was so much worse than anything we'd seen since the Great Depression. There were a number of factors that affected it. Initially, if you look back at 2007, going into the bear market, stock valuations were at normal levels. In other words, they weren't overvalued. They were at fair levels. I mean, the S&P was only up 5% in 2007. Real estate, on the other hand, had been stretched excessively, and real estate was very overvalued. So you had a situation where you had the real estate market selling off, and then you had the stock market at fair value selling off following it. This time when the market sold off, there were a confluence of events that came together. There was the banking crisis, which triggered it, and then we had the media that was piling on and making it bigger than life. And then you had investors scared to death. But even still, as we went into September, October, November of 2008, it was like a normal bear market cycle. Once we got down into October and November, when you compare the depth of that bear market with the previous 34 bear markets, you find that this bear market was hitting the same levels as we've seen previously. Now what was different though is this time we had a political election, and you had, in addition to the media and in addition to the banking crisis, you had politicians scaring everyone to death. And because of that, a lot of investors were just scared to death. And the way that investors vote when they're scared to death is they sell. And so you saw a market that went down, that should have stopped going down around 9,500, instead go down to 6,500. And that put it into, one of the all-time worst bear markets we've ever seen.